Okay, good evening, everyone. I think we are live now. All right, so hi, everyone. My name is Marcus. I am from Societe Generale. We are the product issuer of this daily leverage certificates. And so we are here today to share with you a bit more about how you can use the DLCs or daily leverage certificates to trade the stock indices, right? To gain exposure to the stock indices with a leverage factor, as well as to be able to trade it in both long and short directions. All right. Okay, so just a very quick introduction, a very quick basic just of how the DLCs, what are the DLCs, right? They are traded on the SGX securities market. So you can access these DLCs through your regular stock brokerage account. It is a derivative instrument, but it's traded on SGX securities market, so it trades the underlying asset, and you're able to trade it like a stock. So you can access through your regular stock brokerage account, especially you can trade it on Tiger. You can find the DLCs available for you to trade on Tiger. But it's traded on SGX securities market, so it trades the underlying asset. This section, and you're able to go through just a very quick, a bit of market color on how the stock indices have performed. You can find the DLCs in the past in the 2022 year to date, how the indices have performed, and quick count key ones like the STI, on how the stock indices 500 as well as the Nasdaq. So I'll give a bit of market color how the indices have been performing, and then I will take the majority of the session to go through explaining what the DLCs are, how you can use them, and so some of the product features that anyone who trades the DLCs have to be aware of. So any pitfalls to avoid, to make sure that you have a sort of a seamless trading journey using the DLCs. All right, so I'll give you all the details as well. And then in the last section, the last 5 to 10 minutes, I'll go through to bring us to our website, dlc.socgen.com. So that's our website where we have all the DLC information for you to have a look at. You can go there and find out and see the full list of DLCs. And you'll be able to find some nice market tools, some tools as well, for you to be able to enhance your journey, your trading journey using the DLCs, right? So some tools to help you along, as well as some market commentary. So a lot of available resources and tools available on the website that you can use as well. Okay, so that's how my presentation today will be divided into 3 sections. And so without further ado, I'll just go straight into a bit of market color on how the stock indices have performed. All right, so this is the STI chart, right? The STI chart and how they perform year to date. All right, so this is the STI chart from the beginning of the year, this year, all the way up to 5th September. Okay, so the STI, the price performance year to date is 2.6%. That's the price performance. Some will note that the total return, which includes dividends of the STI, is about 6 to 7%. So the dividends do make up a big chunk of the return, but price return wise is at plus 2.6% this year. And this is versus a sea of red amongst the Hang Seng Index, Hang Seng Tech, S&P 500, and the Nasdaq 100 indices, which are down double digit year to date. Okay, so the STI has been quite resilient, staying in the green in the year to date. All right, so we'll see whether they can keep up the momentum for the rest of 2022. But from peak to trough, you can see the STI peaked at around the March period, March this year, at around the 3,450 points level. So that's where it had a double top at the top there, both hitting the 3,450 level twice before falling all the way down below the 3,100 level. So from peak to trough, it's about a minus 11.4% drawdown on the STI index. All right, and then followed by a very swift rebound sometime in mid-June. It rebounded all the way to August, about 7.7%, a very quick rebound, a very sharp rebound as well on the STI, about 88% rebound from mid-June to August. And then now it's starting to slow down, starting to nudge lower, to go lower, and currently sits above the 3,200 points level. All right, so it is above the 50-day moving average. 50 moving average is around the 3,200 level as well. Slightly above that, as well as slightly above the 100-day moving average as well, but it's trading below its 150 and 200-day moving average. All right, so this the STI index has been quite in a bit of a big range, a large range between 3,450 level and the 3,100 level. So that's a 3,350 point range, 10% up and down. So it has been quite a volatile a year for all the markets, and STI has not been spared the volatility as well. It's been going up and down. You can see the M shape over here of the chart. It's swing up 10%, down 10%, up 10%, and then down 10% again. And then right now it's swing up to midway of that range. So there has been quite a lot of wild swings on the STI. This is not really typical of the STI index. Historically, it's not that volatile, but in recent months, we have seen increased volatility even on the STI index. All right. So even though it is still plus 2.6% for the year, there have been a lot of huge swings on the STI index, as you can see from the chart over here. All right. So that starts off why we want to do this presentation on how you can trade the stock indices using the DLCs, because even in a very flat plus 2.6% year-to-date performance, relatively flat, there is a lot of swings in the market, short-term swings in the market, which investors can leverage on. You can trade the long direction or you can trade the short direction, and you will need an efficient instrument like the DLCs to trade this up and down 10% swings. All right. Okay, so that's the STI. So far, the most resilient among the other indices that we've seen, with a 2.6% price performance year to date. Okay, and then let's go on to the next one, Hang Seng Index. So Hang Seng Index, we all know Hang Seng, the Hong Kong market / China market, has been very much in a bear market for the last 1 to 2 years. So it has been really a very bearish market for the Hong Kong and the China markets, with multiple headwinds in place, the COVID zero strategy, as well as all the tech regulatory reform that we saw, tech sector reform that we saw in the past 1 year. All right, so there has been a lot of headwinds for the China and Hong Kong market, and so the Hong Kong market has been on quite a bit of a downtrend. Recently, in this year 2022, in March, we did see some signs of some light at the end of the tunnel as the government, China government, pledged support for the economy. So that created a very huge swing in the market. In a very short span of a few days, we saw that the Hang Seng Index, after falling 27.2% from its peak to trough this year, from 25,000 points level all the way down to the 18,000 level. It rebounded very swiftly, plus 23%, up from 18,000 back up to the 22,500 level over here. All right, so that was a huge month for the Hong Kong China market. The March month, there was especially a lot of volatility in the market. We even saw the Hang Seng Index move 9% in 1 day. The last time that the Hang Seng Index moved 9% in 1 day was back in the 2008 and 2009 global financial crisis. All right, so it's really quite interesting times. All right, in terms of the Hang Seng Index, for the Hang Seng Index. All right, so after that swift rebound in March, where we saw it dip to 18,000 and then rebound to 22,500, it has been very much sideways in terms of the Hang Seng Index. Since March all the way till now, it has been very sideways, trading within the small range of 19,000 to 22,500 range. So that's a 1,500 point range. So it's quite a tight range that it's been trading into. It's been going up and down. You can see in the Hang Seng Index, up and down 2 or 3 times, and then currently right now it just sits above the 19,000 points level. So we have to see whether this range will hold. If it does break down go further below the 19,000 level, definitely there could be a chance that it will revisit the 18,000 low that it saw in March this year. All right, so there has been very much a range trading on the Hang Seng Index. I think the index is trying to consolidate itself. All right, so I think hopefully it is a consolidation rather than a consolidation to break down after that. All right, so hopefully you will be able to see some strength in the Hang Seng Index in the months to come. Right, Hang Seng Index has been a year-to-date performance of minus 16.8%. All right, so it is relatively resilient compared to some of the But then those are the tech indices, so you can't really compare market apples to apple. But it's been falling this year, similar with the US indices as well. But just to point out, I think it's worth to note that the Hang Seng Index is currently minus about 37% of its February top. So it's February 2021 top. That was the highest point in the last decade, or for the Hang Seng Index, where it reached the 30,000 level. All right, so that's the February 2021 top. So from that February 2021 top all the way till now, it's minus 38% of that peak. All right, so it's worth to note, that the Hang Seng Index, the last bear market, it fell 37% between the January 18th and the March 2020 period. So January 2018 and March 2020 period, where it fell 37%. Then the last one before that was the Hang Seng Index fell another 36% between the April 2015 to the February 2016 period. All right, so we are there in the sense that we have reached the extent of that 36 to 38% drawdown from peak to trough in terms of the Hang Seng Index. But of course, past performance does not indicate future performance. We never know how whether this bear market for the Hang Seng Index could be even more than 37 or 38%. All right. So that's definitely past performance are definitely not an indicator of future performance, but it does show us some important insights into the extent of what the previous bear markets have been like. So for those who want to position themselves, at least they have that reference. All right. So that's where the Hang Seng Index is right now. Hopefully, we might continue to consolidate. Hopefully, but do watch out for that 19,000 level to see whether the Hang Seng Index will trade below the 19,000 level, or will it bounce back up. Okay, and then next one. All right, the S&P 500 index. So S&P 500 index is down 17.6% year to date. And so this is roughly almost the same as the Hang Seng Index, just a 1% difference. All right. So the S&P 500 is down 17.6% from year to date. From peak to trough, it did fall by minus 24.5%. All right. So that is from the 4,800 level all the way down to the close to 3,600 level. All right. So the peak to trough is minus 24%. And then after hitting that low around the 3,600 plus level, the S&P 500 did a very quick swift rebound as well, a very sharp rebound. Plus 19% rebound from there all the way back up to the 4,328 point level. All right, and that coincides nicely with the 200-day moving average. You can see over here at the top, over here at the line. So it hit the 200-day moving average, and then in the past couple of weeks or days, it has been falling quite sharply back down to the 3,900 point level where it currently sits. All right. So the S&P 500 has been is deep in the bear market. Technically speaking, for a bear market, there must be a minus 20% from peak to trough. So we can say that the S&P 500 as well as the US indices are technically in a bear market. And we hope and we'll see whether they will continue to go deep into the bear market territory. Will there be any rebound? But that will very much depend on, I guess everyone's looking towards the FOMC, the Federal Reserve, how are they going to play with their monetary policy. So the September 20 to 21st upcoming FOMC will be very key to see what if there's any sort of messages from the Federal Reserve. All right, so the S&P 500 is down year to date by quite a large extent, minus 18%. But we did and for the Nasdaq itself, let's look at the Nasdaq. All right, so the Nasdaq is also down. It's down by, of course, the tech index. So the technology is a sector specific index rather than a broad based market index like the S&P 500. So the Nasdaq is a tech specific more tech related sort of index. It's down, so it's down by a larger extent, minus 26%, close to minus 26% from year to date performance. From peak to trough, it's down by minus 33%. It fell from the above the 16,000 level all the way down to the 11,000, the low of 11,000. And then currently right now it sits at the 12,000 level after a very swift rebound of 24.3% again during mid-June, all the way to just a few till August, to end August. All right. And then last few days, last week or so, it has been really on a sharp decline after being rejected at the 13,730 points level. And now it's sitting above the 12,000 points level, and that is minus 26.7% off its peak in early January. All right, so that's the Nasdaq. So I think really the key, whether it will revisit the 11,000 point level low, or whether the S&P 500 will hit the 3,600 point low that it saw this year, whether it revisit that level again, I think would very much depend really on the FOMC meeting that is coming up in September. So that is going to be a major event to watch out for. All right. So in summary, the 4 indices, the STI is the best performer relatively to the other indices. It has remained quite resilient, but even within that plus 2%, 2+% price performance, flat, sort of relatively flat performance, there have been a lot of swings on the STI. Plus minus 10%, up and down, up and down. So that creates a lot of trading opportunities for people who are more active in their investment. And the HSI has been attempting to consolidate. As you can see that it was trading in that range earlier, trading in that range between 19,000 and 22,500 points level. So the key will be to see whether, does HSI break that 19,000 point level and breaking the range, or will it rebound back up? All right, S&P 500 and Nasdaq are quite deep in bear territory. The sentiment has been very, very bearish, but we'll look out for the FOMC meeting in September, 20 to 21st September, to see whether there's any sort of messages or key messages that the Federal Reserve will be able to give that can help the market to perhaps be a bit more positive. All right, and so across all the indices, there is really a heightened volatility in the market with big swings in the market. We saw how the Nasdaq and S&P 500 rebounded swiftly, plus 20+% after falling from peak to trough down. It made a very sharp rebound in mid-June to end August. So the market has been really characterized with big swings in both directions, both long and short directions. All right, so in this kind of a very volatile environment, you need that creates a lot of trading opportunities for investors. In the short term, you can take a trade for even intraday, or even you can trade it for a few days or a few weeks. And to be able to trade these instruments, these indices, you can use the ETF. The ETFs are a bit more of a buy and hold instrument, whereas the instrument like DLCs, the daily leverage certificates, they are more designed for trading. And because they are more designed for trading, there's a bit more efficiency on that front in terms of the fees, in terms of the costs, in terms of just how much capital you need to put in. So definitely there is what I would like to share with you guys in the next section is how you can use the DLCs, the long and short DLCs, to be able to trade these stock indices, both the long and short directions. All right. So last to sum up the market color, I think really just we have the 20th Chinese Communist Party Congress starting on October 16 coming up. So that's where the presidency will be re-elected for the third term, preparing for his third term, and also the FOMC meeting that's happening on 20th to 21st September. Okay, so two major events for two world leaders. This meeting, these two upcoming events will be something that everyone's eyes will be glued on. Every single word will be scrutinized, and every single everything will be scrutinized about these two events, and that will move the markets. So please do look out for it, and also position yourself for it. Okay. So before I go into the how to use the DLCs to trade this stock indices, I just want to share with you guys a very exciting campaign that we've just started. So this is the index trading rally campaign that we've just started with we jointly organized between SocGen as well as Investing Note. So we will be having this rally from 5th to 30th September. So we'll be giving out 5,000 worth of prizes, but the main aim of this campaign is really to just to share more about how investors can trade the indices. Trading stocks is quite straightforward. Everyone understands that. But trading the indices is something that people are perhaps not that used to. They might know how to buy the ETF for buy and hold strategy, but to take a more active trading approach or a more active approach to your investment, how do you really trade the indices? Then what are the instruments available? So this is one of the aim of this rally. We have a lineup of exciting speakers who will share with you guys how do they trade the Hang Seng Index, the STI, the S&P 500 Index, the Nasdaq Index. So you can join the webinars or view the recorded webinars to learn from them. But you also can participate in a bit of more fun activity by, we have daily polls where people can vote whether they think that the index will close in the green or in the red. So by participating in all these activities, there are $5,000 worth of prizes up for grabs. Okay, so please do scan the QR code and you'll be able to access the event page for this index trading rally. And we hope to see you there. Hope you will participate and just learn from each other. There are a lot of comments and sharing as well on the post that is shared on Investing Notes platform about how to use the DLCs to trade the indices. All right. Okay, and moving on to my the core of my sharing today is how to use the long and short DLCs to be able to gain exposure to these indices and ride the market volatility that we've seen across all the indices that I went through. All right, so going back into the fundamentals about what the DLCs are, daily leverage certificates. It is a leverage instrument, a short-term trading instrument for you to be able to trade the underlying. So it is something that is for short-term trading. It's not for you to buy and hold. It includes leverage. So leverage is a double-edged sword. You have to manage your risk well, but it can enhance your return in the short term if you know how to use it wisely. All right. So it has a fixed daily leverage, which means that it gives you a fixed daily leverage of the underlying asset's daily performance. So the DLCs track an underlying asset, whether it's an index or whether it's a stock. It tracks the daily performance of the underlying asset with that fixed leverage factor. All right. So we have stock indices, stocks as underlying assets. We have index as underlying assets. Currently, the stocks are all at 5 times leverage, up and down, long and short, while the indices has both 3 times, 5 times, and 7 times leverage that you can use to trade the indices. All right. So the DLCs come in a long and short DLC. So if you are bullish on the underlying stock, you will buy the long DLC. If you are bearish on the underlying stock, then you will buy the short DLC. All right. And so these DLCs are all listed and traded on SGX securities market. So Society General, we are the issuer of these DLCs. We will issue them and then we will list it on SGX for investors to buy and sell to trade the DLCs. All right. And we do as the issuer as well as the designated market maker. SocGen, we will provide liquidity on the DLCs, on all the DLCs during the SGX trading hours. We'll provide that liquidity, that bid and offer quotes throughout the trading day for investors to buy and sell the DLCs easily. All right. So don't have to worry about the liquidity issue. There are over 250 DLCs listed on SGX that we have issued. And not all of them are actively traded. There are always the more popular ones like the Alibaba, Tencent, Hang Seng Index, STI Index. But the less popular ones like your Great Wall Motor or your Genting DLCs, these are not as actively traded, but even though there is no traded value on the DLCs during the day, it doesn't mean that you can't get out of the DLCs, or if it doesn't mean that you can't buy and sell the DLCs, because for us as the DMM, the designated market maker, SocGen, we are there to make the bid and offer quotes throughout the trading day as the underlying asset moves. We will also move our bid and offer quotes throughout the day, okay, to reflect that 5 times or 7 times performance of the underlying assets performance. All right. So do not worry about the liquidity. We'll be there to provide that bid and offer quotes for you to buy and sell the DLCs throughout the trading day. Okay, so that's the DLCs. And just one last thing. This is very common misconception that the daily over there stands for, means that you can only trade this instrument for 1 day or for intraday. That doesn't mean it. The daily refers to the fixed daily leverage that you get every day. You get that 5 times or 7 times leverage on a close-to-close basis. And that's what the daily means. Okay, so you can trade these DLCs for more than a day. You can trade it for a week or a few weeks, etc. but definitely I stress again that this is a short-term trading instrument. So it's not meant to be bought and hold and held for a long period of time, for like months at end or even for a year. Okay. All right, so I mentioned we have 250 DLCs, okay, 249 to be specific, but we definitely have more new issuances coming up soon. And we have come a long way. We have launched this product on SGX in 2017. That's when we debuted with the 3x and 5x DLCs on Asian indices, followed by, we went into single stocks in 2018, and we continue to expand the shelf all the way up to today. All right, and now we are at 250 DLCs, and we just introduced something exciting, the DLCs on the US indices, that's the S&P 500 index, as well as the NASDAQ 100 index. And I'll touch on that a bit later. All right, so we have a large range of Hong Kong and Singapore stocks and indices. So indices, that I just want to mention just now, the Hang Seng Index, the Hang Seng Tech Index, as well as the Hang Seng China Enterprises Index. We have these indices, and the Singapore side, we have the STI, we have the MSCI Singapore Index, and we have a whole range of single stocks as well. All right, so in large caps, you name it, we should have it. The Tencent, the Alibaba on the Hong Kong side, the Singapore side would be the DBS, the banks, as well as your STI constituent stocks, Roma, CapitaLand, etc. So we do have 5x long and short DLCs on all of these single stock underlyings as well. Okay, so we have been constantly enhancing as well as expanding the shelf to more underlyings. And we hope to do even more and even more markets in the near future. All right. The latest launch that we have is the STI DLCs. So these STI DLCs is actually something that is long overdue. We have been trying to do this for quite some time and finally managed to get it out. So this is the 2x, 5x, and 7x leverage on the STI index, right? So it gives you that 2x, 5x, and 7x leverage on the daily performance of the STI index for both long and short direction. So you can choose your leverage factor. If you're a bit more of conservative, or looking for a bit longer term, say maybe for a few months, kind of exposure, then perhaps you can consider the 2x or 5x leverage. But if you're looking for a bit more of a higher gearing, and a bit shorter term trading, maybe even intraday or 1 day kind of holding period, then you could look at the 5x or the 7x leverage on the STI. So right, so we usually launch different leverage factors to try and cater to different investors or types. So some are a bit more conservative, some are a bit more aggressive. But in any case, there is one DLC for everyone, right? So you can trade both long and short directions for all the different leverage factors. And you can see over here in the screenshot, this is from our website. This is the STI DLCs for 2x, 5x, and 7x leverage. And you can see from the name, you can see that it's the STI DLC followed by the leverage factor, long or short DLC, and then SG stands for the SG issuer, followed by the expiry date in your mom and date format. Okay, so these are all the STI DLCs. You can look them up on our website. Going on to the next one. All right, so this is the exciting launch that we had earlier this year in March and April. We launched the S&P 500 and NASDAQ 100 index DLCs. So what is quite novel about this US indices index DLCs is that it allows you to gain exposure to the US markets during Asian hours, right? So it's only traded during SGX market hours between 9 to 5 p.m. So that's when the US market is closed. But then the E-mini futures are trading throughout during the Asian hours. Therefore, the S&P 500 and NASDAQ DLCs will track that futures to give you that 5x performance. All right. So the futures is something that perhaps is not for everyone. It is futures and options are something that's really quite complex, and people have to really understand, what the role and it's a margin product as well. You have to open a different account. Therefore, we wanted to give an easier access instrument such as the S&P 500 and NASDAQ DLCs that is traded on SGX securities market, which you can access through your regular stock brokerage account, including Tiger Broker's account. So you can easily access it if you are already trading your DBS stock or your UOB stocks, for example. Okay, and it's also traded in SGD, so you don't have to worry about changing your money to US dollars to go to buy the futures or the options. All right, and so these DLCs give you 5x leverage on the daily performance of the indices for both long and short directions. During the Asian hours, it will track the E-mini futures, but on a close-to-close basis, it will track the cash index. All right. So it will track the cash index that trade during the US market hours. So the DLCs, the US index DLCs, allows you to gain a bit more gain exposure to these US indices, even during Asian hours as well. Perhaps it is during Asian hours, the futures perhaps do not move that much. It moves maybe around 1% or less than 1% during the Asian hours. So for those who are looking for maybe an intraday sort of trading strategy, this US index DLCs might not work for you as well, given that the E-mini futures don't trade as much, don't move as much during Asian hours. But definitely for those who are looking for a bit of holding it for overnight or even for a few days or a few weeks, this US index DLCs definitely can suit your needs, especially if you are not going to be waking up at 12 a.m. or 1 a.m. or middle of the night to manage your position. You don't mind just buying and holding it for a few days or a few weeks without having to look at it. Not saying without having to, you should look at it still, but without having to actively manage it. Then I think these DLCs could really suit your needs, especially if you are very used to the Singapore market and you want an easy access through your regular stock brokerage account, and also just traded in SGD. Okay, so do check out our US index DLCs as well. On our website, we have a dedicated page for it, a mini page for it, where you can learn more about how it tracks the US futures and also what happens during US market hours. You continue to track the index, just that you are not able to manage your positions during the US market hours. You can only manage it during SGX market hours. All right. But in the case of any high impact news during Asian hours, that could affect the US market, that happens at 2 p.m. in Singapore time, or maybe 1 or even in the morning of Singapore time, and you want to get in early ahead of the US market open, even before the pre-open at 4 p.m. You want to get in early, or you want to hedge your positions, overnight positions. You want to hedge it during Asian hours. You can consider this US index DLCs as well. Okay, so that is some of the highlights. And now down to the basic features of the DLCs. I mentioned just now that there's a fixed daily leverage on the underlying asset, right? So it gives you that fixed daily leverage on the underlying asset's daily performance on a close-to-close basis, all right? So it's the formula of the DLCs is quite simple. These DLCs it gives you that fixed leverage every day. So it is not unlike your other leverage products that some of you might have heard of, like your options or even your structured warrants or your futures. All right. So this unlike structured warrants and options, these DLCs are not option type products. All right. They do not have like a strike price. They do not have like time decay. It just gives you that 5 times of the underlying assets daily performance on the close to close basis. So the pricing or the payoff is quite linear in that sense. You don't have to worry about, I have to choose which strike price, I have to choose which expiry date. These DLCs, if you just decide what underlying asset you want to gain exposure to, what leverage factor you want, and then you will select the DLC that you want to gain leverage to. Okay, that you want that you want to buy in terms of the DLC. All right, so it's one of the reasons why the DLCs have grown to be quite popular on the SGX market in the last 5 years. Is because of it is relatively easy to understand in terms of its payoff. You can see that, in this example over here, if the STI goes up by 2% tomorrow, all right, on a close-to-close basis tomorrow, it goes up by 2% tomorrow. This STI long DLC, 5 times long DLC will go up by 10% times 5 of that. All right, so the value of the STI long DLC will go up by 10%, while the value of the 5 times short STI DLC would fall in value by 10% because, your gains and losses are both magnified. All right, so if you manage to get the right direction, you will be making 10% tomorrow. But if you got the direction wrong, then you'll be suffering losses of minus 10%. All right, so on a close-to-close basis every day, these DLCs will give you that 5 times of the underlying index or stocks daily performance. Okay, so that happens every day, all the way up to the valuation date, which is 1 day before the expiry date. Okay, that's how the payoff of the DLC will work. It's quite straightforward. There is no optionality in it, and it's also not a margin product, given that it's traded on SGX securities market. So you don't have to worry too much about margin calls, about whether you might have is there a margin call at risk for this product. So there is no margin call on this product. the most you can lose on your investment is whatever that you put in. If you put in $2,000 worth and buy $2,000 worth of DLCs, even if the direction of the underlying stock goes adversely against you, the $2,000 is what is the maximum loss that you will suffer. You will never be asked to top up or have a margin call in that sense. Okay. All right. So this is just a screenshot from our website of a particular DLC, the 10-cent DLC that we have. So this DLC, this will show you that how the 5 times performance works. So this DLC is priced at around 150. This is a very old data, so definitely the price is different now. So the underlying moved by about 1 to 2%, 1.5%, and then you can see that the DLC also the price is around 150. From its previous close the previous day, it has gained around 10%. All right. So that's where the close to 5 times performance of the DLC is given. This is the long DLC. But of course, if you see the short DLC, it will have suffered losses of similar magnitude. So in this case, the 10-cent short DLC fell, corresponding to the gain in the value of the 10-cent stock itself. Okay, so this is where the performance is, and so the DLCs are priced differently from the underlying stock. So it's important to note to see how looking at our website dlc.songgen.com, you can see how the DLC will move in line. The price of the DLC will move in line with the underlying stock performance. All right. All right. So important to see how does the price of the DLC move with the underlying stock. Could be a bit different from other leverage instrument out there. So it's important to see understand how it works. As a derivative instrument, it's priced differently, but you can see that the where the 5 times performance is on a close to close basis. Okay. All right. So looking at how the use cases, okay, the use cases of the DLC, as I mentioned before, it's a short-term trading instrument. So you can use it for intraday trading, day trading, or you can even use it for swing trading, which is maybe about a few days or a few weeks. Or you can use it for hedging purposes to hedge your long-term buy and hold investment portfolio. If you see a correction in 10-cent coming, you could use a short DLC to hedge your positions while you hold on to your 10-cent stocks that you will hold for life. So you can have quite a few strategies here on the DLCs. You can use it for day trading, swing trading, or hedging purposes. All right, so in this example over here, you can see the DLC has moved by the STI rose by 0.8% intraday, just within one trading day, while the 7 times long STI rose by 6.25%. So that's 7 times that of the STI daily performance. So that's how to show you can make a decent 6% gain intraday by buying and selling the DLC within the same trading day, because the STI rose by 0.8%. All right. And then on the swing trading wise, if you want to hold it for a few days, you can see over here the example where the 7 times long DLC CWHW was up by 9.1% between 17 June to 29 June. So that's maybe about 10 trading days around there, roughly. The STI was up by about 1.3%. So the 7 times long CWHW gave you about a 9.1% gain within that 10 to 15 trading days. All right. And then for the US index DLCs, we also saw you can use it to you can use a long DLC to make a gain, and when you think that the underlying index will move up. So between 15 March and 29 March, the S&P index moved up by around 10% within 10 trading days, while the long DLC CYAW gained around 65%. All right, so that's more than 5 times that of the underlying stock performance. And I'll explain in the next section why there is this more than 5 times performance because of the compounding effect. All right, so I'll touch on the compounding effect in the next few slides. But over here, you can see between 5th April and 5th May 2022, you can see that the stock index, S&P index, actually fell by 10%. All right, it fell by 10%. So that you can use the short DLC. Short DLC gained around 50% as well during these 23 trading days. Okay, when the S&P 500 fell, the short DLC will gain in value. Okay. So in summary, you can use it for intraday trading, for swing trading, or even for hedging purposes. to use the short DLCs to hedge your positions, or even to make some gains on when the stock corrects to be able to offset your long-term investment portfolio. So quite a variety. It allows you that flexibility lah. So I think for the DLCs, there's quite a lot of flexibility whether you're looking to intraday trade it, to swing trade it, or to hedge it. The fact that it gives you that leverage factor allows you to capitalize on very short-term opportunities with it as efficient. If you were to buy the stock itself, it might not be as efficient if you're looking for maybe just a intraday trade or for a one-day trade. So the DLCs have that leverage factor to give you that efficiency and enable you to capture those short-term opportunities. While the short DLC, on the other hand, allows you to capitalize on corrections in the market. On terms of the stock price falling or the index falling, you can use the short DLC to capitalize on these opportunities that you will not have otherwise been able to capitalize on if you were to use the ETFs or use or even to buy the stock itself. All right. Okay, so you can use these DLCs to trade both directions, and that's really one of the key selling factors in this kind of market right now, where it is not a very big bull market, it is a bear market, and you want that flexibility to be able to trade both long and short directions during such markets. Okay, so I mentioned the compounding effect. How did that S&P 500 gain that 65% when the index only gained 10%? That is because of the compounding effect. Right, the compounding effect is a very, very important feature of the DLCs. It can work for you or against you, so it's important to note. This compounding effect stems from the daily reset, the leverage factor. I mentioned that you will get that 5 times or 7 times performance every day on a close-to-close basis. So that creates the compounding effect, which can work for you or against you. So it's best to look at it with an example over here. We can see that this DLC over here on the table on the left first, you can see that the underlying starting off at 100 points level goes up by 1% on day 1. Day 2, it goes up by 2%. And then on day 3, it goes up by another 2%. All right. So overall, over the 3 days, it's gained 5%. While the 5 times long DLC, on day 1, it gained by 5%. So 1% on the underlying equals to 5% on the DLC. So that's correct. Day 2, it gained by 10% because the underlying gained on day 2, it gained 10% because the underlying gained 2%. And then on day 3, it gained by another 10%. Overall, the DLC, the 5 times on DLC is up by 27%. So 5% times 5 is about 25%. So where did the extra 2% come from, right? That 2% is because the daily gains and losses of the DLCs are locked in. On day 2, you can see that plus 10% performance is off a higher base of $2.63 and not the 2.5%, $2.50. It's based off the higher base of $2.63. And then on day 3, the 10% gain is off a higher base of $2.89. So compounded, your gains are compounded if in a strong trending market. So the compounding effect can work for you in a strong trending market. If it continues to go up and you bought the long DLC in a strong uptrend, you'll be able to make more than that 5 times performance. All right. If you bought a short DLC and the stock continues to fall for consecutive days in a strong downtrend, then definitely you'll be able to make more than that 5 times performance as well. Okay. So the DLCs work best in a strong trending market because of the compounding effect. But in a volatile market where the underlying index is going sideways, really sideways in a sense, then definitely the DLCs, the compounding effect will not work for you in that sense. On the table on the right over here, you can see that on the first day the underlying was up by 2%. The DLC was up by 10%. Okay, let's talk about underlying first. Underlying was up by 2%. Then it was down by 4% on day 2, followed by a swift rebound of plus 7.3% up on day 3. All right, on the table on the right here. So at the end of the 3 days, it is up a total of 5% from day 0. It's up by 5%. Whereas the DLC, you can see on day 1, right? On day 1, it gives you that same 5 times performance. On day 1, it's up by 10%. Day 2 is down by 20% because the underlying is down by minus 4%. And then on day 3, the long DLC is up by 37% because the underlying is up by 7.3%. But for the full 3 days, you can see that it's only up by 20% over here. All right, it's only up by 20%, whereas 5% times 5 is 25%, right? But over these 3 days, this long DLC is only up by 20%. So it lost out on that 5%. That is because of the compounding effect again. All right, you can see that on day 3, right? the plus 37% is based off a lower base of $2.20 because of the losses it suffered on day 2. All right. So every day your gains as well as your losses are locked in. All right. So if the DLC drops to a lower value, even if it rebounds the next day or subsequently after that, the performance is based off a lower base already. All right. So therefore, you might not get that 5 times performance when you hold the DLC for more than a day. All right. It can vary. You either get more than 5 times if it's a nice trending market, but you could get less than 5 times performance if it's in a very volatile or sideways market. All right. So therefore, the DLCs are really not designed to be held for a long period of time. They are meant for short-term trading because of this compounding effect as well. In the long term, there's mean reversion. Markets always come back to where it is to a certain extent in the long term. So therefore, this compounding effect it's because of the compounding effect that it's really not designed for a long-term buy and hold on the DLCs. It's meant for investors to capture short-term trading opportunities in the market, intraday, a few days or even a few weeks, but definitely not meant to be bought and hold for months at end or even a year. Okay. So that's the compounding effect. Please do read up more on the and familiarize yourself with it before you trade the DLCs. You can find more information on our website under our education section. But also you can find the compounding effect tool or simulator tool for you to envisage how does the compounding work as well. These are just some examples of how the positive compounding. So you can see over here it's more than that 5 times performance on the underlying stock performance. Whereas on this one it's a negative. Doesn't work for you. The compounding effect doesn't work for you because you are getting less than that 5 times performance. Okay, over a period of time. Right. So remember that 5 times performance is on a close to close basis. But if you hold it for more than a day, you hold it for a few days, the compounding effect will kick in, and it gets more sort of a greater effect. The compounding effect becomes greater if there is large swings on the underlying stock and also over a longer period of time. All right. So do take note of the compounding effect. For those of you who might have traded the SQQQ or the TQQ or the leverage and inverse ETFs that you have on the US listed market, on the US stock exchanges, payoff is exactly the same. All right. So there's also this compounding effect that will kick in. And so do take note that when you trade this kind of fixed leverage instrument, you have to be mindful of the compounding effect. And over the short term, it's a short-term trading instrument and not a buy and hold instrument. Okay. All right. So the cost and fees is transparent. In a sense that we publish it daily on our website. For every single DLC, we'll publish what is the exact dollar value of the daily cost, as well as the percentage terms. All right. So this cost and fees is priced into the DLC bid and offer price. So every day we'll publish intrinsic close price that will already factor in this cost and fees, overnight cost and fees. So intraday we do not charge any fees. There is no fees on this DLCs except for your broker commission or exchange fees. But if you hold the DLCs overnight, then there will be an overnight funding rate, the cost that will be charged to the DLCs, and it's reflected in the DLC price itself and published on our website daily. All right. So we try to be as transparent as we can on the DLCs on our website. All right. So do check out our website on the daily cost and fees. And also the airbag mechanism is another important feature of the DLCs. It's designed to reduce the exposure of the DLC during adverse market movement, right? So they have every single DLC has an airbag mechanism inbuilt into it and a specific trigger level. So for the index at 7 times leverage and 5 times leverage is at 10% of the underlying index performance move. So if the underlying index STI drops by 10% tomorrow, the 5 times and 7 times long STI DLC airbag will be triggered, but the 5 times long short 5 times 7 times short STI DLCs airbag will not be triggered. Okay, so it's only triggered if it goes against your direction. All right. So what happens when it's triggered? If the index STI moves 10% intraday, that's really quite a rare. So therefore, this airbag is really quite it's not meant for a day-to-day thing. It's only in really adverse market movements. So if the STI drops by 10% or moves by 10%, the airbag will be triggered on the respective DLC. And then the DLC will be suspended for 30 to 45 minutes. And then there'll be an intraday reset where it will determine the new observed level during that first 15 minutes of that suspension. Then after that, when it resumes trading after the 45 minutes, you will still have your DLC, if you're holding on to the STI DLC before that, you are still holding on to it after that. But the performance of the STI DLC would be based off that new observed level that's determined in the first 15 minutes of the airbag trigger. Therefore, your exposure after that is reduced. Okay, so if the index continues to fall further after that, then your losses are also minimized. But if the index rebounds after that, then your ability to recoup your losses is also minimized in that sense. All right. So the airbag mechanism is something that is really built in to reduce the exposure of the DLC in adverse market movement. Index is plus minus 10% move. For stocks, is plus minus 15% move. So it doesn't happen every day that the indices move 10%, nor do the stocks move 15% every day, every other day. So it's something that you should know of. And we have more information on our website, including an airbag level indicator as well that you can see. But it is not something that I think you should worry too much on a day-to-day basis when you trade the DLCs. Just understand how it works, and also be prepared, to manage your risk as well. When the market moves such wide swings, plus minus 10%, plus minus 15%, that's why it's important for you, and it's a times 5 or times 7 on the DLCs. Therefore, it's important to manage your positions well when you're trading with leverage, of course. All right. Okay, I've come roughly to the end of that core section of what are the DLCs about. I hope you managed to gain a bit more color on what the DLCs can do for you. It is SGX instrument, so it's listed on SGX securities market. You can trade it through your Tiger Brokers account or any other retail brokerage account. And it gives you that 5 times or 7 times fixed daily leverage on the underlying index or stock's performance, daily performance. All right, and then about the compounding effect as well as the mechanism, which hopefully you can also find some time to read up more on our website dlc.socgen.com. All right, so I want to quickly share with you guys the website, but I can't access it, so I'll just use screenshots for now. All right, so do visit our website at dlc.socgen.com. Under the products tab, you're able to find search for the DLC that you like. You can find a full list of DLCs over there. So to get started on the DLCs, I encourage everyone to visit our website at dlc.socgen.com. Under products, you can search for the list of DLCs. You can see what underlyings are available. And say if you're interested in the Alibaba DLC, you can search for Alibaba, and then you can see all the long and short DLCs over there. And then you can choose which DLC you want to trade. There is a red star indicator over here. Under underlying, you can search for Alibaba, or you can search for Tencent, etc., or even the Hang Seng Index, or the STI Index, or the S&P 500 Index. You can look for the underlying, and then you look for the star indicator, which indicates the most sensitive DLC. So that will be your preferred DLC to use to get exposure. If you are every long and every underlying, there'll be a star indicator for the long DLC and a star indicator for the short DLC as well. All right. So visit our website. Under the search page, you can find the list of DLCs. Look for the star indicator after you've suited for which underlying you're looking for. All right. And then you can use our price matrix on our website, a tool that allows you to see how does the DLC move in line with the underlying asset. If the underlying goes up to this level, what will the price of my DLC be? All right. So we try to make it easier for you to see how the DLC moves along with the underlying asset's performance or movement. All right. So you can look at the price matrix tool at the top of each individual DLC page. So over here, if you click into any of the DLC name, you will come to an individual terms page of the DLC. And then over there at the top, you can see the price matrix tool as well that you can click into to see how does to see how does the DLC move with the underlying movement on an intraday basis. Okay. As well as there are many other tools under the markets tab. So under the markets tab, in our website, you can see the charts. You can see our charts under on our website, but you can also see fund flows, who've been buying what DLCs, who've been buying long DLCs on UOB, who've been buying the short DLCs, how much people have been buying, as well as the long short ratio on the underlyings on the DLCs as well. For Meituan, more on the short than on the long, for example. And also, look at the underlying stock fund flows as well on the SGX fund flows. Retail have been buying what, or institute been buying what, as well as the Southbound Connect on the Hong Kong exchange side as well. What's the top traded underlyings as well, to gain some insights into how the markets move. and also, gain some ideas and as well as to which underlyings you might be keen to study further and trade using the DLCs. All right. So do explore our website, dlc.socgen.com. Please visit our website. You can type this into your browser. Visit our website. There's quite a lot of tools and information there. But most importantly, I think I just want to make sure that everyone remember this point. On the top right-hand corner of our website, there is a DLC hotline, 6226-2828. So do drop us a line. My team and I, we are there to answer your call during SGX market hours. It can be about anything. It can be about, explains certain concepts of the DLCs. We'll help to explain that to you, or even any feedback that you have on the DLCs. You want to see certain underlying or certain DLC listed, let us know your feedback. We'll be there to answer your call during SGX market hours. So we really appreciate your feedback, and also any questions that you have on the DLCs. Do give us a call. Do not be shy. If you're a bit shy, you can always write into us as well. There is a contact us form over there on our website. Right. Any questions that you have, please just feel free to reach out to us here at SocGen, and we'll be glad to answer any of the questions that you have. All right. I think I've come to the end of this session. And I'm really thankful for Tiger Brokers for allowing me to do this sharing with you guys. Hopefully it will help those out there who are keen to gain exposure to the stock indices, as well as maybe on a short-term basis with leverage. Then definitely the DLCs will be something that you should consider. And hopefully through this session, you've learned a bit more about what the DLCs can do for you and how to get started trading the DLCs. All right. So thank you very much. And I am ending just in time, 8:30, close to 8:30. So thank you everyone for your time this evening, and also hopefully this session has helped you. All right, thank you and good evening.